With a new Lunar New Year having begun and the Beijing Winter Olympics at an end, China is set for a full return to work. Despite the market angst seen late last year, to our mind, China's economy is ready to shine in 2022. Highlighting its momentum at end 2021, whereas the market had anticipated a 3.3% increase in GDP over the 12 months to December, annual growth instead printed at 4%, thanks to an above expectations gain of 1.6% in Q4 and a hefty revision to Q3. Into 2022, China therefore has considerable cyclical strength, much more than the market had anticipated. A key source of this strength is trade. Having added just 0.1 percentage point on average to annual growth between 2017 and 2020, net exports contributed a spectacular 1.7 percentage points to growth in 2021. Although support from trade will ebb this year, it is unlikely to fully unwind given the strength of the global recovery and for as long as Chinese households refrain from travelling offshore. As we often highlighted in 2020 and 2021, the growing popularity of domestic consumer brands amongst Chinese households also argues for a favourable trade position into the medium term. Reduced direct support from trade in 2022 is also likely to be offset by renewed vigour in investment. During 2021, base effects related to early 2020's collapse in activity hit growth hard, the year-to-date gain for fixed asset investment falling from 35% at February to just 5% by December. The February 2022 result is likely to show additional weakness owing to disruptions related to the Beijing Winter Olympics, but in the months that follow, momentum will build. Justifying our expectation of a persistent uptrend in investment in 22 and robust growth beyond is the success to date of Chinese industry, as well as the quality growth agenda through which China is multiplying the goods and services it offers the world, while keeping a keen eye on profitability. All the while, the size and strength of markets for these products continues to grow in scale and resilience, thanks to the global recovery and Asia's long-run economic development. Note as well that credit availability is supportive of sustained, robust growth in investment as 2022 begins. And further, authorities are in the process of providing additional support, adding liquidity and reducing the cost of funds across the economy. While China's property sector reset has further to run, stronger activity and confidence will become apparent shortly. As for business investment, the cost and availability of capital is supportive of residential construction. And it is also worth remembering that a pickup in starts does not solely depend on households regaining trust in private developers, with anecdotes pointing to local governments purchasing land from troubled developers to build low-income housing. These developments provide a quick double win for Beijing, emphasising to the market their desire to reduce developer leverage and build an equitable mix of housing across the nation, while also quickly putting a floor in for construction. With a wide trade surplus and a robust, long-lasting expansion of industrial capacity ahead, there is good reason to also have confidence in the prospects for household consumption in 2022 and beyond. Key here is that, unlike the West, consumption growth is not dependent on fiscal easing, rapid debt accrual or excess pandemic savings, but rather structural growth in discretionary income. While January did see further disruptions from restrictions to counter COVID-19, these look to be having less and less of an effect on spending, clearing the way for growth. All in all, we expect year-average GDP growth of around 5.7% in 2022 to be followed by a similar size gain in 2023 of 5.6%. As a final note, in assessing China's growth prospects and position in the world, it is important to recognise that President Xi is expected to be confirmed for a third term in late 2022. This will also be a time when many of the recent regulatory changes will near completion. It will therefore be important to keep an eye out for new initiatives and strategies related to economic development and engagement during 2022.